Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Okay, we're going to be having a quick look at oil today, but before we begin I just want to get something off of my chest and apologise for the lack of content lately on YouTube. And for my patrons, I know it's frustrating. I'm finding it more frustrating as at the end of the day my job and desire is to grow my channel and to grow my Patreon subscription, and I can't do that if I'm not putting out content. But fact of the matter is, over the last couple of weeks I've just been suffering with my allergies. My hay fever's gotten really bad, and although I'm doing everything I can to counter it, nasal sprays, eye sprays, antihistamines, the lot, it's just something I have to put up with. It happens every June, and once again normally around either the middle of July to the middle of August we get these two big grass pollen blooms, and they just knock me out. They just knock me out at the end of the day, and when my eyes start streaming, nose starts running, throat gets all scratchy and chest gets all tight, I'm just not able to record. It's that simple, and it's frustrating. So hopefully feeling better today, it's a sign of things passing and I can get back to normal. But that's it really, guys. So fingers crossed the worst is over and we can get back to business. I figured I'd take on oil today as it should be a relatively short video and relatively easy to handle. So if you're just going to have to pull up with me breathing heavily. My chest is still a bit tight at the moment. So enough of the worries me, and let's just get on with it. Couple of ideas here to look at. They both are long-term bullish. Market bottomed in April 2020. We know on the month the futures contracts we traded into negative figures. We know the CFD starts at 0 and the continuous contract in front here on the CL2 starts at roughly $1730. Alright, so we're calling that the low. We can look at this two ways so far. There might be a third way to look at it as well, but here's the first way I'm looking at it. 1, 2, 3, 4. Okay, and then all of this is a fifth wave extension. 1, 2, 3, 4, 5. With a smaller 1, 2 already complete. I like the idea of an extended fifth in the commodities market. I do not like the idea of two sharp corrections at the same wave degree. That's what's putting me off this. We'll come in and have a look at these targets in a minute. Now let's have a look at the bearish idea. Bullish long term, but bearish over the shorter term. This is the idea that it is 1, 2, 3, 4 as a sideways correction, expanded flat, zigzag for the 2, nice alternation at the same wave degree. That's a positive, and we've still got an extended fifth. Fifth was longer than the 3, but the 3 was not the shortest of the waves, and therefore obeying the rules for an impulse. Nice blow off move. From there, A, B, C, flat, back to support, and off we go in the 3. So bullish long term, bearish short term. So let's come in now and have a look at these counts, starting with the more bullish one, and look for our invalidation points. So I've got it as a wave 4 triangle. It's not pretty, I know, and there are different ways of looking at it. Wave 4 triangle, A, B, C, D, E, and then a diagonal into a 1. Right. This is a deep 2. But it can't go any deeper, not really. If it goes beyond 96.93, the idea of this being 1 and 2 is wrong and invalid. Now it could still be that the 4 is not in. Here's the 4, and that this is actually A, this is B, and this is going to be C for a flat, but that can't come back beyond 83 spot 83. Because that would invalidate wave 4 by going into price 1 territory, and since we've counted this as an impulse and it does not count as a diagonal, we can't go beyond that level. So if this is 1 into 2, what do we want to see next? Well, we want to see 5 waves on a smaller time frame complete. We want to see a 3 wave retrace, right? We want to see a reaction out of that on an even smaller time frame, and there's your trade setup. This is your stop loss, or this is your stop loss, depending on your level of risk you want to take. Confidence above the wave 1 high. So if we get above the wave 1 high and we get an impulsive move up and back and continue to impulse higher, this count gets stronger, there's more credence to it. So looking for a break above that level. Let's just pop a little price tag on here then, shall we? There it is. Lock that in place. Okay, so that's the bullish case. We've gone 1 and 2. It could be a deeper correction with a 2, but that C can't come beyond 96.93. Okay, so let's put these in the bullish folder. Excuse me, and get to the bearish count for the moment. So bearish count, we spoke about this being a major high, blow off fifth, major high, and it was a fifth wave extension. It's just not a gigantic fifth wave extension. It is bigger, it's just not huge. Okay, so from here we're going to move down. You'll have to forgive that. My little son has just come back from a doctor's trip with his mother, and he's just having a little bit of a cry in the background there, so bless him. But anyway, so A, B, C, B, and then 1, 2, 3, 4, 5. I think overall I prefer this count, to be absolutely honest, because I think this looks impulsive to me. This move down from the high, I mean, it could be corrected, but it has a better look to it. And also the alternation of a larger time frame, which I've already mentioned. So this idea is invalid if we come back beyond 120.88. We don't appear to have a completed corrective structure yet, though. Could be 5, A, B, and C coming up in a zigzag. Either way, looking for if you want a short, looking for this wave to weaken, find resistance. Okay, maybe around the 50 or the 61.8. We're already at the 50. Roll over, get an impulsive move down and a free wave move back, and then set up the exact same trade to the downside. Okay, if you're wanting to short. So go above 120.88, which is completely invalid. Alright, and looking for this to come up in 3. Now at the moment, it's tricky because it's kind of looking impulsive. It honestly could go either way. So we need one more wave to complete back either way before we can be more confident. Okay, so now let's come out, have a look at the slightly larger, larger time frame here for the moment. So let's go with the idea that it's a 1 into a 2. Now there is one more thing I want to add before we leave. Right, one more thing I want to add before we go. But let's just go with the bearish idea for the moment. So a retracement of 50 to 61.8% puts us into this zone here. Now if I bring up some levels for us to look at, we can see that we've got structural support here, 75.14. Also got structural support here at 66.31. We're in a demand zone here. You know, a lot of market acceptance, a lot of trading going on around here, a lot of buyers waiting in here. We've got this previous little pullbacks, these areas of demand, right, where buyers have come in. Okay, and if we come back into this zone, likely to find support before moving higher. We do have another zone below, but we really don't need to worry about that unless all of this breaks down, do we? So we know that the 61.8 is here at $59.11. I repeat, $59.11. And the 50 is at $72. Repeat, $72. So that's a retracement of this into a 1 and this into a flat into a 2. Okay, now B wave did retrace at least 90%. Okay, and this does appear to be 3 as opposed to 5. But if you find a way to count it as a zigzag, feel free. I think it's more likely a flat structure. Okay, so now let's take an extension of the A projected from the B to look for our flat target. So the first one is at $86.88. Right? Doesn't invalidate the idea of it being a 4 either. Okay, but it could be 1 into 2 and be a shallow 2. It would be quite a shallow 2. That's the idea that this is a regular flat. Right? We did not expand the B waves. Now it could still come to lower targets. 123.6 and 131.8 next targets for the C wave, and they both start to hit those levels, okay, in support that we've got down here that we mentioned. Finally, there's a 1618. That would be quite an extended C for a regular flat. It would be very extended. but it is the most common extension after the 100 whenever we're talking about extensions. So we've got the 1618 down here, and this is 65.65, $65.65. Okay, and it falls right in between the 50, right in between the 618, and right into our support and demand zone down here amongst all this market acceptance. It seems like a very logical place if we have topped to find support. Okay. Now let's have a quick look at our RSI and our MACD here. So there's no divergence at the highs because we have a high and a lower high. We have a high and a lower high, high and a lower high. We actually got a high and a higher high in the OBV. But it is a significant difference between the highs here in momentum and the RSI. It's not truly divergence because we didn't make a higher high. Right, but it is a sign of having weakened somewhat. Now if we take our moving averages here, we can see how we're still trending above the 250 exponential moving average. We're currently back above the 60 exponential moving average, which is in orange, trading around the 10 and the 20, having broken and drawn this correction. We could come down to the 250 and still have that legal wave 4 structure because we haven't invalidated the wave 1. So we have tested it before during larger corrections. Let's just come out to the weekly time frame and see what we'd be looking at. Now let's bring back up our levels. Now the 1618, the 50, the 618 and our 250 exponential moving average are all currently sat in our demand zone down here. So a longer term pullback into support, there's a lot of confluence down here, is what I'm saying. A lot of confluence. Right. All of this is a moot point if we make higher highs, right? Because then we're still bullish and the extended count is probably more likely. So on that note, let's try and get an extended count where this isn't a triangle and this gives us alternation. And I think I'm going to start work on that in my spare time. One other thing I wanted to point out was also how since the peak of the volume, okay, volume has been steadily rising, okay, and then this last move from this high here has all been on declining volume, and the volume between these two highs has declined significantly. Okay, we can actually see in line this is the higher high rather than this. Okay, now that means when we do look at it in line, I'm not saying we should, just saying keep it in mind, we can see how if we take closing price data, there is very strong divergence in the RSI and the MACD. So it's just something to bear in mind. Like I said, overall this is weakening at the moment. Now big thrust up in volume, big shift in positive momentum, move to new highs, aggressive move to new highs, and all of this could have just been corrective. But just keeping an eye on it. So let's say then that we go with the same idea of 1 and 2, but we go 3 and 4 to here, and this is now a fifth wave extension, similar to the first count but without the alternation issue. In that case, we now have to make this 1 and 2 and this 1 and 2. Now I don't think that's going to be too big a problem. So let's just shift this into minor degree. And let's come down to the smaller time frame. Excuse me. So how do we make this work? Well, I think we can extend, or we can make a larger diagonal. Excuse me, get there in a moment. And it would have to look something a bit like this. Like that. Okay, so we would go 1, 2, 3, 4 and 5. This would be minute degree. Sorry, excuse me, this would be minuet degree into minute degree. Right, similar to our other count, but obviously we don't have that alternation issue now. Stop seeing this as a triangle and just viewing it as a minor wave 1 and 2. A, B, C, like that. Thankfully for you watching this, everything I mentioned about the previous invalidation points still apply. The only difference is we now have to shift the invalidation point of this being away 2 back to here. It's a little lower. So we'll bundle all this together into one new count, and that gives us potential for this to be A, B, C a little lower. Okay, but in terms of the invalidation point for the bearish count, it's still the same place, which is the previous highs. That still applies to this count as well. Right, break the highs, and this bullish interpretation, or the other bullish interpretation, is more likely to correct. Break this invalidation point down here, and this is incorrect. 92.74. So there is room now to look at this potentially as an incomplete 2 before pushing higher. I think that's the best I'm going to be able to offer you guys in the meantime. So we'll throw all this into a new count, and I'll go away and work on that in my free time. Alright then guys, thank you very much for joining me on this technical analysis of oil. I hope you've enjoyed it. If you're new to the channel, if you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and feel free to leave us a comment in the comment section below. All the best, take care, and I'll be back with you as soon as I can. Bye bye.